Hey folks, welcome to a product review at Finominal. Today we're going to look at the Simplified Volatility Premium ETF, which trades under the ticker SVOL. Now, the fund has about $1 billion of assets under management, and it aims to be an alternative source of income within the equity space. So let's find out in terms of what makes this fund tick. And it is worth mentioning that its portfolio construction is slightly unusual, although very much in line with its name, in the sense that the portfolio is comprised of VIX futures and options. Now, the VIX is based on options on the S&P 500, so it still makes sense effectively to benchmark SVOL to the S&P 500, which is also something that Simplify itself is doing on the fact sheet. Now, SVOL was launched in 2021, and you can see that there were certain periods where SVOL did significantly better than the S&P 500, specifically the bear market 2022, but most recently somewhat underperformed. Now, as regards to purely from performance perspective, and we can also look at in terms of what are the drivers of the returns and risk by running a factor exposure analysis. And so here we see the factor beta to the major asset classes. So we do see that the kind of core driver is effectively equities, where we take the S&P 500 as kind of like the market. You can see that the exposure to bonds, the US dollar, or commodities is pretty much flat as expected for an equity product. But what's kind of interesting to see is that the exposure to equities, that it also varied across time. So the beta ranged from 0.8 to 0.3 at its low point, and currently is almost at is actually at a record high level. Now, that's in terms of what asset classes drive the performance of SVOL. We can also look at the alpha over time. And in this case, we do see that the cumulative return contribution over time is primarily comprised of two components. One, the stock market, in this case S&P 500, right, which explains most of the returns. But there is also a significant amount of unexplained returns, which we can call alpha. Now, that's for SVOL in a standalone basis, but next, it probably makes sense to compare SVOL to other similar strategies. So what we've done is selected 4 other ETFs that are option-based strategies with a high yield. So all of them kind of offer to provide a limited downside, a little bit of limited upside, but a high yield. So let's see how SVOL has done versus those peers. So you can see we've taken a covered call strategy, buy right, put right, and another buy right ETF. Now, over the time period from 2021, when SVOL was launched, to today, you can almost see the same chart as with the S&P 500. Essentially, that SVOL behaved somewhat differently to those other strategies. You can see the other strategies are much more in line from a trend perspective, but that SVOL outperformed during certain periods of time, but that kind of stopped most recently. Now, what's kind of interesting about SVOL is that if you do look at it behaving slightly different than these strategies, which have more equity exposure, we can also measure that via correlations. So here in this chart, you effectively see the correlation of SVOL and those 4 peers to the stock market. We've taken the S&P 500, and you can see that these 4 peers are much more correlated to the stock market than SVOL. And that's great for SVOL because it does aim to provide or be an alternative source of income, and that at least you can substantiate with regards to it featuring a lower correlation to the stock market, right, than these other strategies. So stated differently, SVOL will provide high diversification benefits. Now, let's actually look at it from a risk perspective. So we did look at it from a return perspective. And if you look at it from risk and return perspective, effectively what you see is that SVOL, despite having a lower maximum drawdown, than those 4 other strategies over the last 3.6 years, it does actually feature the highest average volatility. And from a return perspective, was not well, didn't generate a higher return. So effectively, from a Sharpe perspective, SVOL doesn't not do so great, and we can quantify that, right? In a sense, from looking at the Sharpe ratios, right? And so what you can see over here, right, the Sharpe ratio that SVOL generated over the last 4 years, right, is 0.61, which is, well, lower than that of the other 4 peers. Now, as mentioned, from a yield perspective, you can see these all have outrageously high yields, right, which I think is the primary interest of investors that are purchasing any of the strategies, right? And that kind of concludes our short review of SVOL, right? So the fund constructs a portfolio using fixed features and options, right? Which effectively lead it to having a lower correlation to the stock market than other option-based yielding strategies. So that's good. Having said that, we do need to point out, right, that from a pure Sharpe ratio perspective and risk-adjusted returns, SVOL was on the lower side. Hope that helps. Have a nice day.